Earlier this week, Microsoft announced that they were integrating ChatGPT into Bing, which is Microsoft's search engine. During the press event, the CFO mentioned that search advertising accounts for about 40% of the 500 billion digital ad market, or about 200 billion. The CFO of its Windows device and search business stated that for every 1 point of share gain in search advertising market that Microsoft can gain, it would equate to a $2 billion revenue opportunity for the advertising business. So what does this all mean for Google, aka Alphabet? So Alphabet trades at roughly 4 times next year's expected sales. So Wall Street is saying and suggesting that $40 billion of Google's revenue that they get for search advertisement will flip and go to Bing, aka Microsoft. And that's why Google, aka Alphabet, dropped more than 10% this past week. So if that's the case, if Microsoft is going to benefit from the integration of ChatGPT, what's the opportunity for Microsoft moving forward? And where can price go from the current price? So let's go to the charts. We're going to go to the monthly chart first. And these wicks, again, this is a monthly chart. These wicks suggest that buyers were willing to step in at the 220 level. So I'm just going to note that. And we're going to circle the wicks at the bottom. Beginning of the year, the markets rose roughly, 10%, but they're pulling back now, as you can see with this wick here. So we are still in a secular downtrend. But if this February candle can close above the downtrend line, monthly downtrend line, potentially Microsoft can continue to move higher. Let's go to the weekly chart. And what you can see from this past week, as I mentioned, the markets pulled back this week due to potential Fed raising rates again for a longer duration of time, or potentially instead of a 0.25% increase, the next meeting potentially going to 0.5%, because we had a strong January job market where over 500,000 jobs were created. And the Fed really wants to destroy the job market in order to lower inflation. So nevertheless, on the weekly chart, we can see a triple bottom, denoted by these wicks here. So potentially, if price does pull back, this 220 level might be a good opportunity to get long. Usually when price breaches the trend line, it usually retests the trend line. So we're going to see if there's any opportunities in this 240 area. Again, currently price is at 263. So let's go to the daily chart. So if I highlight this area here, from August of last year to say the beginning of this year, prices has really just been range bound, and then price finally broke out in January, but it's pulling back. Usually where price breaks out, it usually retests the breakout point. So a lot of things can happen. Price can resume higher because it broke out, it's retesting the breakout point. Price can retest the monthly downtrend line, or if we have a secular down leg in the broader markets, price will retest at a minimum this 220 level. So, and here was an area where we had sellers, and it kind of makes sense. Which is why Microsoft is pulling back. Let's mark that off. We'll call that 278. So I wouldn't chase price. I wouldn't chase the hype. Let the news, the markets settle down. Aggressive buyers can potentially buy at this 250 level. Let's distinguish that. Because that would coincide with the test after the breakout of this downtrend line. Conservative investors can potentially look to buy if price pulls back even further to this 220 level. Just want to see what's to the right of the 220 level. This was the February 2020 high. So if we do see another leg down, price will at least test this, what was previous resistance, become support at the 190 level. So we got aggressive buyers can buy now. Less aggressive can buy at the 250. Conservative buyers can buy at 220. But if we see the broader market break the October lows, November lows, 190 would be a beautiful buying opportunity. Until next time.